And then if we consider that on a daily basis, that is over 43 million transactions every single day for Hedera with one single partner. It's almost like the current financial system is breaking in front of our eyes to potentially usher in some new technology. In the 1990s, there were plenty of people that believed the internet would fail and that Web 2 was just a fad, but there was a small portion of the population that believed it would revolutionize the world of finance, data, and commerce. And there's also a large group of people today that believe the crypto asset class is just a fad. History may not repeat, but it sure does rhyme.
If you think about the enterprise and government market for blockchain, the estimate is by 2030, trillions of dollars of value are going to be created. And the question I often get is, why are trillions of dollars of value going to be created? And I think a lot of people don't get this. Blockchain actually can save enterprises and governments tons of cost and create revenue opportunities. Just like cloud computing, which was mostly a cost play, blockchain technology can do both cost and revenue. It's really being ignored, but not by us.
Alright, what's up guys? Kevin Cage here with another crypto update. Hope everybody's having a great day and let's dive into the info. So first up, shared by XRP Crypto Wolf, we have crypto-friendly Signature Bank admits that they were never insolvent, but shut down anyways because US regulators wanted to send a very strong anti-crypto message. Said in quotes, there was no real objective reason that Signature Bank had to be seized. I think part of what happened was that regulators wanted to send a very strong anti-crypto message. We became the poster boy because there was no insolvency based on the fundamentals. And also really quick, speaking of USDCs, you can see in the top left hand corner we're looking at the chart of the trading pair USDC, the stablecoin, versus the US dollar. And we can see just a few days ago on March 10th, the USDC token dropped all the way down to approximately 33 cents, meaning that somebody actually filled an order for USDC and as soon as the price returned back to $1 or 99 cents, they 3x their money. We can see in December of 2020 along with January of 2021, somebody was able to buy some USDC at like 25 cents. So you're talking a 4 or 5x your money right away. So that's crazy. We can also see some scenarios where people were selling USDC at $5. Absolutely crazy. And meanwhile, just another day in this crazy crypto market, we can see shared by Rajat CFA, we just had the biggest bank collapse in America since 2008, and it happened because of a bank run. And to start with some background info, so before March 26th of 2020, we can see the US financial system was based on fractional reserve banking. We've covered this plenty of times. Essentially, we can see it's a system that allows banks to only keep a certain portion of clients' deposits. And with the remaining amount of money that you're putting into the bank, they can go around, they can lend it, they can earn interest on it, and really do whatever the heck they want with it. Corruption at its finest. So as he says, fractional reserve banking allows banks to do whatever they want with their clients' deposits in order to make a profit. So they can lend the money, they can invest it, etc. But on March 15th, 2020, the Board of Governors of the Federal Reserve System announced a change to reserve requirements. On March 26th, 2020, the US banking system would be changed to no reserve banking. Simply put, banks could start doing whatever they want with all client deposits. So I'm sure that makes JP Morgan very happy. Over the pandemic, demand for loans dropped, so banks needed a different way to make money. They started buying assets with client deposits. It sounds crazy as I'm reading this aloud. This is the system that we are in today. The issue is that asset prices are volatile while deposit amounts are fixed. Decreases in asset prices could mean banks cannot satisfy withdrawal requests when clients go to the bank and they say, hey, give me my darn money. A bank run happens when a large number of clients start withdrawing their deposits very quickly. Other people get spooked, and it creates this crazy cataclysmic effect. And this leads banks to not being able to satisfy short-term liabilities or client withdrawals. So everybody calls the crypto asset class a scam, but the existing banking system basically has no rules. That is the biggest scam in the world. So anyways, we had the largest bank collapse since 2008. The Silicon Valley Bank, SVP, was a commercial bank in California. And this was an important bank in terms of traditional finance, one of the largest banks in the US based on deposits. The increase of interest rates over the last year and a half affected asset markets significantly. This means that the assets of SVP Silicon Valley Bank bought using client deposits lost significant amounts of value. It holds cash deposits of large technology companies, so this affects all of the United States and even globally. So for example, Roku holds 26% of its cash with SVB. So as we know, this could lead to huge rippling effects across the entire financial system. So everybody's goal right now should be protecting themselves, having an emergency fund and multiple backup plans. Now, just a few more things before we dive into some crypto news. We can see the Silicon Valley Bank bailout has been ruled out by the Treasury Secretary, Janet Yellen. The federal government is not considering a bailout for Silicon Valley Bank, but is focused on addressing the needs of the failed bank's depositors. And Bank of London bids to acquire Silicon Valley Bank's UK arm. We also have Brad Garlinghouse, Ripple CEO, tweeting, setting the record straight on Silicon Valley Bank questions. Ripple had some exposure to SVB, but it was a banking partner and held some of our cash balance. Fortunately, we expect no disruption to our day-to-day business, and already held a majority of our US dollar with a broader network of bank partners. So I'm sure you guys already saw a bunch of clickbait articles saying that Ripple the company is in trouble, but it looks like they're fine. And Brad also says it's ironic that so much of what's happening as some companies scramble to even make payroll highlights how broken our financial systems still are. Wires are still not 24/7, 365. Rumors led to the collapse and the frictions of moving money within a deeply fragmented system. So for several years, and just like in the movie The Big Short, there is a small portion of the population seeing what others aren't. The banking system is fraudulent. The global financial system is in trouble. It is insolvent. There is so much friction in these walled gardens and silos. And I believe that the crypto asset class is going to be absolutely crucial for the global financial system. So if South Korea launches a metaverse fund to expedite domestic initiatives, the South Korean government invested 24 billion Korean won, over $18 million, to create a fund of more than 40 billion Korean won, or $30 million plus, toward metaverse development. And we also have Brave Browser now allowing crypto asset selling inside of a wallet extension. And also regarding API 3, so remember, over 3,000 data feeds across 25 networks, including mainnets and testnets, have been launched. And we can see in March, API 3 will begin Phase 1 of DAPI data feed rollout. And a DAPI is a decentralized API. So this Phase 1 rollout, whereby 100 plus DAPIs serving cryptocurrency and Forex data feeds will be accessible in a fully self-serve and permissionless format on 10 different networks. So we can see Moonbeam, I believe Moonriver, Polygon, Optimism, Ethereum, Binance, Phantom, you name it. So I'm still staking in my API 3 bag, and we can see that AccuWeather deploys their API 3 Air node, bringing weather data directly to blockchain applications. Now I know this was last year, but keep tabs on this. We also have a recent article put out by Ripple, how companies can modernize treasury management. And we have Wrath Economan with a perfect summary. The latest Ripple insight is all treasury management, selling RippleNet, the network, as access to a global network. Allows bypassing rough corridors, Southeast Asia, India, Brazil, and Mexico. And there's a reduced need for pre-funding, which is incredibly important in today's financial system, as you can see, with liquidity issues and insolvency. And even helps suppliers factor receivables. It's almost like the current financial system is breaking in front of our eyes to potentially usher in some new technology. Traditional payment rails and antiquated pre-funding requirements are an enormous but hidden economic drain on emerging markets and small and medium enterprises. There's trapped capital and foreign accounts all over the world. We're talking trillions of dollars. And with RippleNet, the XRP ledger, and a variety of other DLT networks, this would help operational efficiency so much. If you're freeing billions or trillions of dollars that is currently locked up or used just to sit there as just-in-case money for pre-funding requirements, we're talking billions and trillions of dollars that can be used and unlocked to create additional revenue for enterprises. And so over time, we're going to see a shrinking number of correspondent banks, which is already happening today. We're seeing a steady decline. Now, whether or not you're into the whole carbon credit solution, I get it. It's just a narrative. I'm not the biggest fan of any of these narratives that the WEF is bringing forth, but it's a narrative to pay attention to for a variety of investments. So whether you're looking at Energy Web Token, a super legitimate project going after decentralizing energy, and looking at Hedera, Algorand, and Ripple, keep in mind there are a variety of use cases being built in front of us today to leverage the XRP ledger as a solution. Remember back in 2022, Ripple the company committed $100 million to scale and strengthen global carbon markets, addresses quality and transparency using blockchain and crypto. 100 million, that is not a small sum of cash. Now I love this clip shared by Hedera the other day, so discussing Hedera's transactions per second is gaining traction. Now remember, their one partner right here, this is Atma.io with Avery Dennison on Hedera's governing council. They are using Hedera's hashgraph, HBAR, as a supply chain tracking solution. And they're using digital IDs right now, over 22 billion products. So we have Lehman right here, he's the co-founder of Hedera, and we have Ashton right here.
Great use case. But then you have people like Atma that have already deployed it. So right now, we have 500 transactions every second coming from Atma, which is just mind-boggling. This is a project from Avery Dennison. And you know, they have They do stickers like barcodes and RFID stickers, and they track things. They track 20 billion things. It blows my mind. Immutably on the ledger. The ledger, the hash graph that Hedera runs, is keeping track of 500 new things every second. And this is stored immutably. You can search it. It has a timestamp. It's like a notary public service. A timestamp that says this is what the entire ledger agreed on, and is a cryptographic proof that this is what the entire ledger agreed on. We're doing 500 a second. So if you go to realtps.net, you can see the real TPS, and it's real TPS. And when people first saw that, they said, oh, you must be cheating and just talking about your consensus or something, internal stuff. No, it's real. It's real users from real customers, real TPS doing real business applications. Fascinating.
Wow.
Now keep in mind, this is just one single use case for Hedera. This is one single partner. 500 transactions per second. 500 times 60, that is 30,000 transactions every single minute. And every single hour, that is just under 2 million transactions. And then if we consider that on a daily basis, that is over 43 million transactions every single day for Hedera with one single partner. Now, of course, with more enterprise users, that amount of transactions would increase. It would not just be these 22 billion products that are synced and tracking with timestamps. So yeah, that's why a lot of us are excited for enterprise government types of use cases for the future for certain L1 projects. Also saw Ripple right here, so we have Blockchain Founders Fund raises $75 million to encourage Web3 mass adoption, which will happen. The fundraising round included Polygon, Ripple, and a few others. And also, speaking of HBAR super quick, this is just another use case we've talked about from time to time, but do not forget about this. This is DCX, the Digital Commodity Exchange. So we're talking about cloud storage, asset tracking, supply chain management. This is another use case for HBAR that is basically helping this digital commodities exchange with fraud mitigation, leveraging Hashgraph. So this is a trading platform, and this DCX platform can now verify individual platform events. An event could be considered a trade. It could be a limit order, anything on Hedera's mainnet. So this is full traceability reassurance that all changes are hashed and recorded on Hedera's consensus service. And this is again just one small use case. And thus far, over 1 million tons of agricultural commodities have been traded since 2020. And in terms of commodities, so let's see, gold and silver is per dollar. We could talk about certain things are measured, a cent per bushel. We could see other things, maybe meats or something for pound, I forget. But basically, there are massive amounts of commodities being traded. This is a multi-trillion-dollar market. So the one point I want to make is comparing some of the largest asset classes today compared to the crypto market. The total crypto market cap plays around $1 trillion today. The all-time high was around 3 trillion. I believe we surpassed 3 trillion, head to 5 to 8 trillion, and then hopefully beyond to like 8 to 12 trillion in the future. Now, I asked ChatGPT some estimates, and some of these dates are a little off, but you get the gist. The global stock market capitalization is around 100 trillion. When we're talking about bonds, over 128 trillion. When we're talking about commodities, almost $19 trillion right there. And now we're looking at crypto around 1 trillion today. And we just mentioned a few use cases even on a commodities exchange, because guess what? Everything is going to be tokenized. It was called the Digital Commodities Exchange. And that exchange is leveraging Hedera on their main network. The plan is for some of these huge networks like HBAR, Casper, XRP Ledger, etc. You do some proof of concepts on these smaller platforms like DCX. You show a lot of success, better efficiency, and savings for customers to make them a lot of money. And then eventually you go to the big boys and the big platforms. So according to ChatGPT, some experts and analysts believe that the crypto asset class could continue to grow significantly in the coming years as more investors and institutions adopt crypto and blockchain tech. Some even predict that crypto could eventually become a major asset class alongside traditional stocks, 100 trillion, bonds, 128 trillion, and commodities, almost $19 trillion. However, there is risk in everything. It is important to note that there are still many unknowns and uncertainties around the crypto market, including regulatory issues, security concerns, we're seeing hacks left and right, and technological challenges, or maybe even interoperability. So one of the things I like most about Casper Network and their technology stack is they're not building a network and saying, hey, enterprises, use this. They are building their system and their solutions around enterprise systems today, so that they can easily use it and sync it with existing systems, and as they continue to evolve, they can evolve with Casper, because the future is unwritten. They can upgrade information to stay regulatory compliant. They can have hybrid solutions, anything. As with any investment, it is important to conduct your own research and seek professional advice before making any investment decision. We also have Just a Tech Guy right here. We can create tokenized securities globally but you cannot settle these in real time on the legacy infrastructure. We need tokenized money and central bank digital currencies on these private blockchain networks. This combination alone is a $10 trillion plus market. Retweeting QNT. And last but not least, we have iTrustCapital linked in the top of the YouTube video description. If you use that link and fund your account, which is free, you'll also get a $100 funding reward. They're coming out with some massive news. We can see upcoming availability, additional alternative assets instead of just gold and silver, and a couple dozen crypto assets. We can see fractional real estate and private placements on the way. Hope you guys enjoyed, and huge thank you to all that hit the like button and share this around. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.